Having rebounded after a decline on Friday, the US dollar index is again trading at elevated levels. The yen showed no response to the news on a growing number of coronavirus cases in the world. At the same time, the Canadian dollar tumbled amid a slump in oil quotes. The US dollar is trading firmly in the green at around 99.50. The market again got into panic in light of the news that the deadly coronavirus is spreading rapidly beyond China. Italy and South Korea are the countries with a soaring number of cases. On Monday, yields of 10-year Treasuries fell to 1.4%, the lowest level in nearly 4 years. Besides, yields of 30-year Treasuries hit a record low. Amid mounting market turmoil, investors are flocking to safe haven assets, like government bonds. Nevertheless, the US dollar halted its steady rally on Friday on the back of unexpectedly weak US PMIs. Such data aroused concerns among investors that the US economy could be also vulnerable to the fallout from the epidemic in China and Asia. This week, market participants are alert to any comments of the Fed officials on the coronavirus impact on the domestic economy. Fed's Vice Chairman Richard Clarida is due to speak on Tuesday. Later in the week, traders will get to know remarks of Federal Reserve Bank of Minneapolis President Neil Kashkari and Federal Reserve Bank of Dallas President Robert Kaplan. In the recent days, traders are puzzled about the trajectory of the dollar-yen pair. The Japanese currency weakened on the back of the fast-spreading infection in Asia, including Japan. The yen seems to have lost its protective features. Today, the yen is trading almost flat despite worrisome reports on the epidemic worldwide. In the New York trade, the yen rose marginally against the US dollar. Even the fact of breaking the level of 112 did not ruin the downtrend which the dollar-yen pair began 2 years ago. The market is aware that the long-term bearish trend has the key resistance level of 112.40. On Monday, the oil market has incurred the heaviest losses. No wonder the commodity currencies, including the Canadian dollar, have been trading under pressure. The US dollar versus the loonie pair surpassed the level of 1.33 but did not stay there for long. The currency pair opened the New York trade at near 1.3280. Investors are worried about the overvalued US dollar that does not contribute to the uptrend in oil prices and other commodity currencies. The greenback stellar rally also accounts for a sharp fall in the US Treasuries yields. Speculators prefer to invest in dollar-denominated assets as a shelter from the coronavirus aftermath. To sum up, traders are facing a grave risk for the rest of the year as they have not priced in this risk yet. That's all for now. Thank you for watching and stay tuned.